Hello and welcome to Beazley's Pink Taxi. Today we're in Madrid and we've stopped at Aon's headquarters to interview Erlantz Urbieta, Aon's Chief Broking Officer for Europe. Welcome to the taxi, Erlantz.
So, Rachel, I was expecting an Uber and suddenly a pink taxi came in, so much better.
So, Erlantz, you were appointed Chief Broking Officer just over a year ago. Can you sum up the last year and give me 3 highlights?
Yeah, thank you, Rachel. It feels like 5 years, actually more than 1 year. But the first thing that comes to my mind is I feel lucky and privileged about having the opportunity to take this position. First of all, because of the team I have and I work with, the commercial risk team that I form part of in EMEA, which is a top quality team. So that was the first thing. The second thing I would say is I started to connect and know a little bit more the region, the countries, the dynamics, the broking, the markets. That led to a discoveries part of the year. And then I would highlight now understanding that we develop a strategy, we develop a plan. And the other thing I would say is I have worked a lot to create a broking community, feeling and acting as a team. And I keep working on that because when we work together and we share and we have a shared vision and a plan, we really can deliver very good things for our clients.
Sounds like you've done a lot in a year and there are lots of highlights.
Feels like it.
I really enjoy with my role working across Europe and kind of seeing all the different countries, as you say, all the differences. It's fascinating. Okay, let's move on to our second question. And we're going to come on to emerging risks. Which do you think are overhyped and what do you think is going under the radar?
So overhyped emerging risk, I don't know, because all the emerging risk has the potential to have a big impact. So, and normally we tend to underestimate them rather than overestimate them. Maybe in the past we have seen a little bit of overestimation in some of the risks. If you remember the electromagnetic fields, EMS potential impact in the past, then related risks that some years ago were like very high in the agenda, then due to politics and geopolitical situation probably has gone a little bit lower.
Mm-hmm.
So, but I don't know. We have the PFAS now, which is a big topic that everybody thinks could be the next asbestos. You never know if that is rated or not. We'll have to see in the future, but that potentially could be one. In terms of under the radar, more than under the radar, I would say that probably we are underestimating the impact of some of the identified risk. What I mean by that, so I mean, for example, the AI. So everybody's cyber and AI related risk. I think we're just starting to see what's coming. Another one is, I would say, the climate change, because everybody talks about climate change and is aware of about the impact, but as it is a long-term or mid-term impact, we live in the present and in the Q and in the year. So we tend to prioritize the risk which we see that are going to affect us this year or in the short term, comparing to the ones that are going to affect us in 5-10 years. Is human nature. And maybe as a third one, I would say we still don't know the impact of this geopolitical massive change that we're going through in the last years.
It's a good answer. And I think, as you said, everything is moving and evolving so quickly that it's very hard to predict.
Totally.
Where we're going to be in 5 years. It'd be nice to have a crystal ball. And so moving on. So new approaches to risk management are essential for the energy sector to seize opportunities coming from the transition to net zero. We hear risk managers asking for bold solutions in this segment. In your opinion, how should we, both insurers and brokers, kind of work together, collaborate and create some really good value proposition offerings?
Good question. But obviously, I think I have a couple of opinions here or considerations. One of them is, I think in Europe, we try to run too much and too fast into the transition, putting a lot of pressure by regulation to our companies. And without maybe measuring the competitive impact it was going to have in certain industries. We've seen like the car manufacturing industry, what is going through. Obviously, the new geopolitical situation has changed that, and I think Europe is now more in a more balanced or gradual approach to that transition because we need our industry. We cannot put burdens and obligations which the rest of the world doesn't have and lose competitiveness and lose our industry. So in that sense, I think there's been a little bit of more rationalization or more rational approach or balanced approach to this. But on the other side, we have this geopolitical situation which has waken us up from the dream that we think cheap energy was available wherever in the world, and suddenly we see that we depend on third parties to have autonomy in energy. So obviously, Europe now is saying we have to do something. We have to invest in energy production. We cannot depend on the Middle East for the oil, on the gas for the US, or any other thing. So there's going to be massive investments in that space. Transition renewables will be a big part of that, obviously. And I think we as an industry, we need to accompany this movement and these investments, and we need to provide solutions. And the capital and the capacity and the solutions are not going to be the traditional solutions, insurance, traditional solutions. We need to be more creative, more open and flexible to new solutions. And that means from developing new modeling capabilities to model those risks and let's say price them. We have to have, for performance warranty solutions. We have to have contingent capital solutions. We need to maybe blend risk consulting, risk advisory, risk management solutions to insurance and capital markets to develop the capacity we need to give a response to this demand, because that sovereignty push plus the data center push, the demand of energy and the investment is going to be massive.
If we're thinking about all the evolving risks that we've just discussed, how we work with clients, do you think they feel more protected now or more exposed than ever before?
Good question, because at the end of the day, one thing is perception and the other thing is reality. You might perceive you are well protected, and you might not be. So for me, it is difficult to know if you are well protected if you don't know what your exposure is. And that means you need to quantify the risk. And when we see at our global risk management survey, only 14% of the clients have quantified the risk, the top 10 risk. And only 19% use analytics to take insurance program decisions or risk transfer decisions. So that means that they feel like, when you see the survey, they feel pretty prepared for certain risks, but they haven't quantified. So they might be ready or prepared for a risk which is much higher. And for example, cyber is number one risk in our survey, and 91% feel they are highly prepared to cyber, because probably is the area where they have put more focus on risk management and prevention and mitigation in the last years, which is good. But are you well prepared? I don't know. Then Anthropic comes with mythos, and then you might not be well prepared, and your exposure might be huge. So the thing is, you need to know what your exposure is. And the good thing is, obviously, the bad thing is that this technology exposes you a lot more. But the good thing is that the new technology is also allowing us, and we have in Aon developed a suite of analyzers to quantify, model the risk, and then help the clients to take decisions based on analytics and modeling and quantification, which are improving more and more and is going to get better. And I think now we are able to provide them with a view about what are the total exposure or the potential total exposure in certain scenarios. And so they can take decisions based on risk appetite, retention capabilities, and capacity available in the market.
So the analytics that you provide at Aon, have you actually seen clients make different decisions on the back of that?
Yep.
Yeah.
Yeah, because as I said, perception and reality sometimes differ. So a client may think that with that limit with a benchmark, it has enough limit for a cyber policy. When you run some scenarios and losses, and you demonstrate the potential exposure they have according to the risk, they could see that there's a big gap because from what they thought was a high losses scenario from what a potential losses scenario is. And they are showing that they need more protection, and they were not aware about that exposure that others have had.
So risks today can no longer be viewed in isolation. Whether tangible or intangible, seemingly disconnected risks can be interrelated and also then have cascading effects. What does it mean for corporates to be resilient today?
Oof. So yes, I mean, we have discussed about the scenario we
Yeah.
are living in. It's like in the last 5 years we have gone like in a black swan scenario every year almost. So it's like companies and organizations have had to adapt to a super complex, volatile environment. So, and then you are seeing the impact of certain losses could be much higher than what we expected. The systemic component of some losses could be very high too. The unpredictability, because we've seen losses coming from risk or areas or geographies where it wasn't on the script that a loss like that could occur there. We have seen floods in the airports in Dubai. We have seen hailstorms in Texas. These type of things are very difficult to navigate, and the only thing things that you can do to navigate that is this complexity is don't have a silo approach to risk. So you have to have a global approach and vision of risk and see the connections. I think you need to use risk advisors, which are experts on the field and who has technology and tools to connect, analyze those risks, see the impact, the interconnections, to measure them, to evaluate them, and also to suggest you a plan to mitigate and prevent that. I think prevention and mitigation is very important now. And that's what I think in this space is very important. As important as having a correct limit and buying a good program of insurance, the resilience actions you can take in terms of risk management, risk control engineering, business continuity plan, organizational and people resilient measures, all this is important.
Now, Erlantz, we're moving on to my favourite topic.
Oh.
Yeah.
What is that?
Partnerships. So what do you look for when you're establishing long-term relationships and partnerships with your insurance carriers? And I'm also really interested to know what does best in class look like in this space?
Okay, so I think the first thing that comes to my mind about partnership is trust.
Yeah.
That's for me clearly. And when I mean trust is that when I deal with an insurer, we have a permanent and continuous and ongoing relation, and it's not a tactical, opportunistic transaction deal. So the second thing I would say is listening. Be somebody who listens, who try to understand what the client needs, what we think what we want to provide to the client, and have a solution-orientated mindset. Okay, I understand that I want to find the solution. It's not I have this product, these are my guidelines. So for me, listening approach, flexibility, solution-oriented, and then innovation, super important, because as we are discussing all this in this interview, things are evolving so much. The market is and the risk are giving us so many surprises that we need to react, and we need people who have an open mindset to say, okay, yes, I'm going to have a look at this. So we like people who really want to bring solutions to us and to our clients.
And as you say, I think the listening is so important, and the ability to get the right people in the room to have the right discussions to solve those problems. Yeah.
Access to decision makers and the people who listen is also important in some cases, and not all the companies and not all the periods, but we have been frustrated at some times, especially in the home market, where you didn't have the access to discuss something. It was, this is the conditions, these are my view of the risk, and I don't want to listen, because it was a hard market. The people were reacting and underwriting quite toughly, quite tough, and that was very frustrated. So we don't want to leave these situations. We want to have the opportunity to discuss with people who know about risk and evaluate the risk.
And I think we will only really benefit the clients properly and to the best extent when we work in partnership.
Yeah.
So, yeah.
And especially when you're able to demonstrate that a good client who manages well the risk and gets something different, that somebody who is not risk aware and doesn't invest so much on that, if you don't differentiate, you're not promoting a risk management culture in the client. So you need to give credit to those clients who really do a good job on that.
No, absolutely. And it's something that we always strive to improve and work on, and it's constantly evolving.
But that's a lot of communication
Yeah,
between us and our
exactly.
teams and listening more.
So we have a tradition where the person in the previous interview leaves a question for the person, for you. So your question here, if you had to change something about how boards and directors view risks, what would you change?
Probably what I would say there is that the board of directors or the board of directors and the C-suite of the companies see risk as a competitive advantage if they do a good job and if they put the focus on risk management and invest on that, because obviously we do see there is a big value between people who performs good in risk management and the performance in the business. There's a connection. There are studies which says that. So I would say normally we all tend to go to the commercial side, the production, the revenues, the and we tend to forget risk. Nobody wants to have a risk, nobody wants to have a loss. Yeah, but when it occurs, then you could lose track against your competitors. People who are very well prepared to react properly in these situations really had an edge in those situations, and also they project an image that they are well managed and they are a solid company to invest. So one thing for me is see risk management as a competitive advantage. The other thing I would say is we have been very bad in our industry to projecting the value of insurance. Okay, insurance in many organizations has been seen as just a cost, when actually it's a contingent lending of capital for certain situations, and it's financing a company. When the organizations go to the banks, they really welcome that capital and that lending. So in insurance we should do better in articulating the value of the programs.
So my final question, if you had to describe Beazley in one word, what would that word be? And you cannot say pink.
Yeah, that was the obvious one, but I would say a specialization. So for me, it's expertise, a specialization. That's what it comes to my mind when.
Well, we'll give you two: expertise and specialization. I like it.
Yeah.
Okay, so the final thing for you to do is, would you like to leave a question for the next person in the taxi?
Of course, an easy one. I would ask him to tell us when the soft market will end. So
brilliant. That is, as you say, the $1 million question.
Yeah.
Well, look, thank you so much for your time today.
You're welcome.
Your answers have been really insightful. Thank you very much for joining us.
Thank you, Rachel.